Hi, guys. This is the Work and Money podcast with host Michelle Wong and guest host
Danielle.
Hi. And here we have a guest, Andy Thaw. Thank you for being on the show.
Thank you. Thanks for having me. It's great to be here. This is always a fantastic event. I'm glad to be here today.
So let's get started.
Okay.
Tell us a little bit about yourself and your company.
Okay. Well, again, my name is Andy Thaw. I am currently the Vice President over at Mid-Island Mortgage Bankers. We are located in Westbury, New York. Mid-Island itself has been around since 1959. We're one of the original bankers when the whole industry was born. And for approximately 22 years, I've been specializing in renovation financing. And today I'm here at the event to speak with Carl and Fort Realty 411 to talk to investors or owner-occupants looking to purchase homes using renovation financing, such as the 203K program or what we're going to talk about today called a home style program.
Okay.
Yep.
Sounds great. So for, let's say, the viewers and listeners that are out there that are starting out and they're trying to get a little bit more familiar
Sure.
with that, tell us a little bit about that.
Okay. Well, everybody looks, obviously knows what a mortgage is, and we know what it's all about, and we look for creating home ownership opportunities with different types of mortgages, as you know, and the old expression, getting the mortgage that's right for you, and whether you're looking to purchase a home or refinance a home that you currently own for different reasons. When you're looking for a home, let's say if you're a first-time home buyer or looking for an owner-occupant property, many people are looking for great deals, if you will. So a lot of people are finding that the real estate market, the housing stock in the country is kind of rather old in many cases, and a lot of the homes need upgrading or renovation. So the product that we specialize in, it's been my specialty for about 22 years, is to provide whether you're a homeowner looking to live in or an investor looking to invest, the funds to purchase the home and also to do rehabilitation or renovation for the property at the same time with one mortgage, and it's a good low interest rate mortgage, and it's rather a traditional way to get it done.
Oh, okay. That sounds great.
It's a great program.
So is this available just in here in New York, or is it
Sure, good
nationwide?
question. Yeah, no, obviously we work a lot in the Northeast, but no, these programs are federal programs, they're national programs. And for the most part, the home style program we'll be talking about today for investors is also usable for owner occupants as well. That's a Fannie Mae product. So Fannie Mae, as you probably know, is a good, solid, traditional, conventional type financing, we would call it. The 203K program specifically for owner occupants or people looking to live in a home for a primary residence, it's an FHA loan. So these are good products that are found all over the country. We personally are licensed in 19 states, and it really just helps to create homeownership opportunities. Fantastic program.
Oh, okay.
Both of them actually. Yeah.
Wow, and 22 years. Oh,
Well, that's my specialty. This is my 31st year in the business, actually.
Oh, okay.
I've been doing this a long time. Sure, thank you. Thank you. And the reason that they're so valuable, I'll lend you for today, is that a lot of the homes that we're looking at, whether they're investors or for owner occupants, a lot of the homes, sometimes you're buying a home that may be undervalued, all right? It might be, for argument's sake, let's say worth maybe $400,000, but they're getting it for $300,000 because it needs a lot of work and it needs renovation. So traditionally, a buyer coming in would have a problem. You know what it's like, just to save for your down payment and your closing costs. So the problem is, even if you could close on the property in its current condition, then you have a home that you now have to renovate. And traditionally, over the years, the buyer would then go to Home Depot or their sources and the credit cards and pay 20% interest, and it becomes just a long-range term and a very expensive way to do it. This product gives them the funds to buy it and renovate it at the same time, with a low cost, again, traditionally low interest rate type of program, and it's just in the long run just creates a lot of opportunity. Same with investors. If an investor looking to purchase a home, again, it's a one source, one loan type of situation that would do it. And to add to that, though, a lot of times you're buying a home, let's say if we're looking for foreclosures or an REO or a short sale where the property might not have utilities or it's in awful condition. Traditionally, programs will not allow you to close on that in its current condition because it's not habitable at time of closing. These products are designed to allow you to close on the property in its current condition because we're going to have the funds necessary to cure that property. You can close on it in its current condition, whereas any other product won't allow you to do that. knowing so that after closing, we have the funds in escrow so that after closing, once they own it, then we can do the work and we pay along the way after they own it. That's the key to this program, that you can close on the property in its current condition.
Oh, okay.
It's-
So now, like, for instance, anybody that wants to obtain these particular loans, what are like the requirements?
Well, in these days, after the industry had changed over the years, think of it like you're applying for any other traditional mortgage. You do have to have employment, and what we do as a lender, we'll look for employment history, usually for the last 2 years. And these days, loans are documented, meaning we'll always look at W-2s and pay stubs and bank statements, good traditional lending. And as far as everyone always asks about credit, from a credit score, as you know, we all have scores at this point. Technically, you can go down as low as 580 credit score. So there's a lot of flexibility here, especially with the 203K program, that because it's an FHA product, gives you so much more flexibility for qualifying. But just think that both of these products are just like any other traditional mortgage, and people would qualify just the same.
Oh, wow.
Yeah, great
Okay.
product.
No, it is a great
Really
product.
is.
It's open. It's like you said, it's more flexible.
Yes.
Especially now that we are in a day and age with the whole credit
Sure.
history.
Of course.
So yeah, that's a great product. So anything else that you have going?
Yeah, well, I'll tell you, the other value to this program I'll share with you also is that not only can you close on the property in its current condition, whereas any other way you really could not do that, is that when you appraise the home, traditionally when an appraiser would go in for the bank, they would look at the home in its current condition and appraise the home accordingly. With this product, though, it's designed whereby we praise the property in its future value condition as if all the work were already done. So the appraisal we get is an as repaired appraisal rather than an as is appraisal. So between that particular point, as well as being able to close on the property in its current condition, that's really where all the magic is going to happen with this program. So I'm here today to talk about that, and I think a lot of people around the country are finding it's just a tremendous opportunity to create their home ownership, whether you're an investor or second homes or for primary residence.
Oh no, that's
It's great stuff.
exciting.
Yeah.
That's exciting.
I've loved it. Yeah.
I'm loving it. I'm getting tingles.
Great.
No, because I do real estate and investing as
Okay,
well.
so you understand,
Yeah,
sure.
so I understand
Sure.
the concept, but that is
Yeah.
a great product that you have, and I definitely have to take that up with my
Okay,
business partner.
sure. There are a lot of ways to finance, but this is a good traditional way. It's a great tool for an investor to have, knowing that they have that. So we are, again, Mid-Island is specializing in this for a long time, and it's my 31st year, and again, I think we bring a lot to the table. So we look forward to speaking more today.
Oh, awesome.
Right?
So for all our listeners and viewers out there, where can they reach you?
Okay, I'm reachable. Our corporate offices are in Westbury. My direct, phone number you'd like is 516-348-0693. That is a direct line to my office. I'll give you my email address if you'd like. It is athaw, that's ATHAW, @mortgagecorp.com. And we also have a set-aside email address. It's 203k@mortgagecorp.com. So love to talk with you more specifically, because every deal is case by case, and call anytime.
Oh, awesome. So there you have it, Andy Thaw. Bye, guys.
Thanks for having me.
Guys, this is Michelle Wong from the Work Your Money podcast. If you like this video, subscribe down below.